All right, yesterday we looked at the residential real estate sector. Today we're going to look at the banking sector. We're going to just run through a couple of banks, some of the ones that collapsed, some of the ones that kind of look like they might be on the verge of collapsing, and some of them that look just fine. Obviously, this is all super unofficial amateur analysis. I'm just tracking the charts and showing that, a lot of the writing is on the wall. And if you just follow along, you can potentially avoid some big macro problems. Probably is not going to let you, trade each and every bank and make a ton of money off it, short a bank or anything like that. I'm just saying that you can keep an eye on the sector overall if you look at a couple different charts. So let's jump into it right now. All right, so like I said, completely amateur analysis, amateur opinion, not financial advice, but let's take a look at banking just like we looked at residential real estate the other day. And let's start out with the fallen soldiers. Signature Bank needed to be bailed out earlier this year. And let's go from the top when it peaked in late 2022 down to the bottom, November 2020. If you bring that back, it basically double bottomed with March 2020. As a lot of these things go, the recent range, and by recent I mean a couple years when you're looking at the weekly chart, usually peaks out at the beginning of 2022 and goes back to March 2020, where most things hit a low for obvious reasons. So what you can see from this is this midpoint, it showed itself very clearly. Again, this all happens after this. So where it reaches up and then it slows down and finds a level of support, it could be a really good indicator that it's basically got the same distance to go to the top. So when we get to the top, we can look at another Fibonacci level and go to that level of from the top to that level of support. So again, now this is, we're thinking about, we're looking at it some point in the future after the top. So some point after January 2022, when you start to see some lower highs and you say, okay, is this going to find a level of strength? And it doesn't really. Again, this Signature Bank, it comes down. You want to see it get back up and then hold this level for it would have been around 300. It does not hold that, and it cuts through. This is a huge warning sign. An even bigger warning sign is when you look at let's look at just this overall range, and you see that it falls below this 50%, which is at about 220, and it goes quick. And then when it bounces, it gets rejected there. So if you're in Signature Bank, this would be a huge red flag. So the charts show when trouble is brewing. Now, we're going to look at Silicon Valley Bank too. Then we're going to look at some bigger banks. And I don't think the threat of complete and total collapse is on the horizon, but you probably would have said that about Credit Suisse, which we will look at the very end. Silicon Valley Bank, similar. Go from the range high to the range low, and you can see a little bit of support in and around this range. We top out. So let's start looking at the next range. And you just start to see the failures. You see it cut through here, get back above, don't get a hard rejection, but get rejected not too long after. And then back below, higher, lower high, lower high. This is a critical support. It looks like we're going to find some support, but it doesn't hold, and then it becomes resistance. So again, you would be down, it's not like you would, be calling the top because of this method, but you would be down 40% if you bought Silicon Valley at the top. Not that I think that this should really be a stock that a lot of people were. You can look at it this way and see that it is crossing some major lines and finding a lot of resistance, and it eventually collapsed. Now let's look at some of these bigger banks. JP Morgan, obviously, a giant in the industry, and probably, hopefully, fingers crossed, not going to completely collapse. I think if JP Morgan collapses, it's probably a sign of the apocalypse, but not in nearly as much trouble as some of the others on this list. Not that any of these are really, I wouldn't say trouble. And again, this is all amateur analysis. as strong as you'd hope if you just want nothing but good signs, but it's certainly not bad. Range high to range low. The top, the peak in November 2021, the bottom March 20, and we dipped down and did not hold this as support. So I feel like you could have been worried in and around this area when we and bounced back above and then eventually held this line. So in April 2023, it holds here and now bounces above. So then we can check this range, and you can see it looks like we're coming down to test it. So again, you start to hold your breath if you slip below this mark of like 148, 150, and then get rejected, because that was really the key. The rejection, once a previous area that either was support or you were hoping to be support flips into resistance, then is when you start to get worried. That hasn't really happened here. And a test and a show of strength could be fantastic for JP Morgan Chase. Citigroup, another common bank, doesn't look nearly as good. It's got a more recent low. Actually, I'm sorry. This is still March 2020. Its high was in June 2021, so it started to show some weakness earlier and hasn't really recovered. And so now we're going to flip it and we're going to look at the weak side, and we can see that we are sort of knocking on this door a couple times. We were below, we were below, we were below. Here we kind of held, and now we're a little bit below. So, you keep knocking on this door. It feels like eventually it's going to break, and then you're stuck below, and you maybe get this $44 mark as resistance, and lower you go. Do I think that something like Citigroup will go belly up? I don't think so, but I feel like stranger things have happened. Bank of America, similar. You know, the opposite of J.P. Morgan Chase, where J.P. Morgan Chase is trending up and holding a trend line. Bank of America had a trend line going and broke through. It's under its 50%. It's under its trend line. Not a great sign. Again, when you're just looking for indicators of the overall economy. I'm not really trading bank stocks, just sort of looking at indicators for the economy. Goldman Sachs, better story. It's in its upper half. If you draw a trend line, you could see maybe it's breaking this trend line. If you take it out a little bit further, it could be holding. You'd like to see it above that. And then if you do your second sort of breaking the halves down into quarters, you'd like to see it just follow this trend line and push up above 350. I'd say one of the more bullish signs for banking. Wells Fargo, we go back. Also, their bottom came around October of 2020, topped out February 2022. This is kind of doing the same thing, knocking on this door, trying to break lower, but currently above. Looks like it's on its way down to test again, and you'd love to see it hold around $40 and head back up. But if it breaks through, and again, not only just breaks through, but when it comes up, because here you can see it came up and broke back through. If it comes up and gets rejected, that's not a great sign. So Morgan Stanley looks a lot more like Goldman Sachs, and is in its upper half, and hopefully is going to hold this trend line if you hold some Morgan Stanley stock. But finally, let's switch over, because I can't find it on TradingView, and look at Credit Suisse, which is no longer trading. And you can see it finished off its illustrious career at about 89 cents. But if you could draw a TradingView line, it would look like this. And as we scroll back into time, let me just remove that line. You can see that it was just heading down for the longest time. It peaked in 2007 at $73, and the great financial crisis happened, and it never really recovered. If you look at it, if we could have drawn that one of those Fibonacci sequences here, you'd see, here's the top, here's the bottom, and this is the midpoint, and it just gets rejected. And I think you'd see, if we could open it on TradingView, that that basically happened throughout. Again, here's the top, here's the bottom. This is roughly right in the middle. So it just keeps going lower and lower and lower. Just not a scene that you want to be part of. You don't want to see these consistent rejections at the 50% mark on any of your investments. And if you're trying to assess the overall market, you don't want to see it going on in banking overall. You can't really say one way or another. Definitely some banks I probably would not be investing in, let alone holding my money in. But it's kind of somewhat inconclusive if it's a dangerous situation overall for the economy, using banking as an indicator. All right. So that's it for banking. We did banking. We did residential real estate. Maybe we'll do commercial real estate. Maybe we'll just go into some individual stocks. Leave a comment if you have any questions, commentary. You want to tell me I'm an idiot. I basically am an idiot. So, but happy to engage, and I'll see you next time.